Today the topic is going to be liquidity. We're going to be talking about liquidity, all right? We're going to be talking about candle analysis. So previously we've talked about volume, right? The highest day volume, how market makers protect those lows. And now we're going to kind of get into analyzing candles and how to use volume and liquidity against that. So we'll take it step by step. And yeah, we'll get started in just a second. All right, so let me screen share. You guys should be able to see my screen share now. Please confirm if you can. If you can or can't, please confirm.
We can see it.
Awesome. All right, so guys, go on the screen share and let's get started. So first trade we're going to go over is SXTP. Now this is the first trade that I took into open, right? What I was watching was what I've already discussed before. Now, for those that haven't watched the videos or attended the recaps, basically what we're looking at is for candles that have high volume and that have broken previous highs. So this fits the criteria, right? This had highest volume of the day so far, and it broke that previous high at 140, right? So we're going to mark that low as at 125 as a support level. Does that make sense why? Simple reason of market makers and the people that came in at this level is not only retail. Big volume like this, 1.2 million shares, is bigger money. It's not only retail that can cause that, right? So that obviously means that there's someone here, there's someone bigger, some bigger money protecting this low, right? And then we got our resistance line, which is going to sit up here at 169, right? Now, how do we play this out? So when it comes down to this level again, you guys can see that selling pressure is slowing down. And this is where buyer liquidity is sitting at. High volume means buyer liquidity is sitting here. Make sense? So buyer liquidity is sitting here, and seller liquidity is sitting at 169. And then after that, you guys can see seller liquidity sitting at 156. Sellers have exposed where they're at. Buyers have exposed where they're at. All right? Now, before we move on, we kind of understand why we have this marked out, right? Now let's do a little candle analysis. What happened within this candle? So we opened at 132, right? We dipped down to 125, grabbed liquidity, right? And then we made a massive move to 169. That's exactly what happened. So obviously for longs, liquidity is right here. Now for selling pressure, we had a move to 169 and came all the way down to 137. So what does that tell us? That although buyers are strong at 130 and we made a move to 169, sellers are even stronger up here than buyers are, right? So we're analyzing the candle. Although buyers are strong here, and we don't have a massive wick like the sellers do, right? So it's just a small range for the buyers. And remember that it's a small range. This small range compared to the big range for sellers. So everything up here is all selling range and everything here is buying range. So now let's move on. After that key level held, which market makers are protecting, we move on, see that these candles get soaked up against this EMA, against this key level, and we make that massive move up to 158, which is where sellers expose themselves before. All right. Now sellers expose themselves again at 158, right? So this whole area is selling pressure. So we're kind of analyzing what's going on here, right? You guys should be doing this in pre-market every day. This is what's happening. This is selling pressure now. This was selling pressure. This was selling pressure. And buyers, this is the most selling pressure on the day. And buyers have sellers have showed that we rejected this candle and boom, most volume on the day, sellers just pounded in the table right here. Right? So although a lot of buyers at this 133, which we will mark as support, right? Because massive buying volume. And what does this tell us? This didn't break previous high of day, but this candle did break a lot of previous highs, right? This broke through a lot. Just this one candle broke through a lot of resistances. So now we have our support levels. We have 125, we have 130 as our support areas, all right? 133. And now we have our 158 selling zone up here. So let's move on. So what happened into market open? Now, SXTP opened around 120, right? Got liquidity here. This is where the candle low was, and this is where liquidity is sitting as well for buyers, right? Because obviously they opened here, grabbed liquidity, and made that move up, right? So obviously liquidity is sitting here for buyers. Now, when it came to that 125, that's actually when I added, and that's when I alerted that I added to the team as well, right? I said I'm taking it at 125. That's my key level. And let's look left. Why is 125 my key level? Let's look right here. This is where we got our line from at 125. The same candle that held lows, right? It grabbed liquidity right here. It made a new high, and it had the highest volume on the day, right? So next time it came and reclaimed 125, that's when we took our entry. And it made a move all the way to 143, which was around 13%. All right? So that was a decent move. You guys understand what's going on here, why I took that 125 entry and why I marked that 125 and these lows? All right, so we're just plotting out where the liquidity is at. Buyer liquidity swept up here and made a nice move. So buyer liquidity sitting here. Make sense? You guys are understanding what's going on? Let me know in chat. Are we following along? Unmute or let me know. Following along? All right. Any questions so far? This is pretty, this is what you should be doing every pre-market, kind of analyzing what's going on. All right. Now let's move on. You guys can see that I want to show you the power of the same level at 125. You guys see, before we had that move to 152 into that same selling pressure, if we extend it out right here, into that same zone, we first reclaimed 125. And where does that 125 line come from? All the way with that same high volume candle. It's that same thing. So all this is different. This is for another day, right? Right now I'm teaching you one strategy. You can incorporate with experience, right? How to get the even bottoms, right? This is just liquidity grab simply. But we'll explain that later. But if we're using one strategy, you guys can see that the highest volume is right here. Next time it breaks over and retests that level at 125, it just makes a rocket ship. Does that make sense? Is that clear? That 125 level worked once, it worked twice. Now let's go to ARBB. Let's kind of analyze what went down here, all right? What happened on ARBB? Now this is more of, I'm going to show you guys why I missed the trade here and then how I could have done better, all right? So obviously we had that first initial pop and then another pop and then a pullback, right? But then buyers come in and sweep this low. They make a double bottom and they make it go up, right? So that's our demand zone. This is where buyers are sitting, right? We're going to extend that out. Now, let's analyze it more. So good volume, decent volume, more volume than the first candle. We make another pop. And instead of rejecting, we actually hold up on this candle, right? We hold up somewhat, reject a little bit with lower volume, and then make a massive move again. And what's the significance on 202? What makes sense here? It's that same thing that happened on that one, SXTP, is that this right here, most volume on the day, most volume candle right here, plus it broke over previous highs. That makes sense? Same strategy. 202, that's the level that I'm watching because that's the same candle that broke over previous highs. That's the same candle that had the most volume. So let's move on. Once you guys see the little bounce, now let's analyze what's going on here. So my entry that I was looking at was at 202. I was looking for a little dip down. It tested once, but I was looking for a dip to 202 and to open for a big rocket ship move, right? Same thing, of a high volume and then big move, bounce off 202. But what happened here was that we never came down to this level. And you guys see before open, buyers are just holding this stock up. They're not letting it dip. It's just this key level. Someone's just holding it up. It's choppy, but it's not breaking down below levels. So let's analyze what's going on here. So we have a massive move, and then we have another move. Although this second candle has a lot of volume, it did not make a significant move. Now this tells us that, hey, it almost had the same volume as the previous candle off of 300K, but the move wasn't even half the size. So this tells us not a massive move. So some buyers are probably trapped here, right? They got trapped, sellers came in. So this is our selling zone. And then once it comes down, we never tested 202 here. So what does that tell us? Before if 202 got tested, then it probably would have, tested into open again. But the fact that 202 did not test and it created a bottom right here at 206 and then made a massive candle, breaking previous highs right here, not all-time highs or all intraday highs, but this candle broke previous highs. This tells us a lot right here. This tells us that this low is powerful. This tells us that this low is after a downtrend. This low broke previous highs and it's breaking out of the downtrend. So this is a downtrend. And then this is the candle that saved it from the downtrend. So that's why, obviously, not one person or not retail traders can save a stock from a downtrend. It's bigger money, right? Think deep. So if retail can't protect a candle, or if retail cannot make something like this happen, then obviously it's big money. All right, a candle like this. So next time when it comes down to that level and to open, that's exactly what it holds and then makes that move. But you guys understand like how I'm analyzing candles, but I also have that 202 ready. I was ready for 202. But if you analyze candles at the same time, that confluence together will make you a great trader. Right? But so far we understand the highest volume thing, right? That's been working very well for us. It did test 202 here, but never tested again, so I never got my entry again. But does this make sense? What's going on? What questions do you guys have so far? Now, one thing I do want to say, there's people buying the stock up here at 250, right? So what I'm teaching you guys is a strategy that should be repeatable for you. Now, you might not use this exact strategy. I'm telling you what I use in my strategy, but it might not be exactly repeatable for you. And that's fine. But you guys can understand how smart traders trade and how dumb money trades, right? Smart money is buying at 202 with the market maker. You guys see this? The person who bought at 202, smart guy. He's buying with the guy who he's buying with the market makers that broke previous highs, right? Same guy, same R support level. This guy bought right here. Boom, he's smart. And the person who bought right here is actually selling to the guy right here. He's selling because he now that he bought at 247, a pullback to $2 is a 40 cent is minus 40 cents, right? So they probably hit their stop losses at this $2 level. They're getting scared. So once you understand that, you should not be buying at 250, and you should, what are you buying at 250 for? There's resistance right here from this candle. Why would you buy at 250? There's literally resistance right here. That's our resistance zone. So you want to wait for the buyer zone. You want to make sure that you're with the buyers and you're not buying into resistance. Because if you buy into resistance right here, you're always going to lose. Does that make sense? So I know a lot of traders are saying, "Oh wow, the stock is running." Right? They catch it at 245. "Oh, guys, keep it on watch. It's running at 245." And then boom, they're like, "Oh shit, it goes to 202." But most traders are not watching it at 202. The smart traders are. The noob traders are watching it at 260, 270. They're watching it at $3. But the smart traders are buying with 202, 210, right around this area. That's what's happening here. So you want to make sure that you're not buying these dumb, super dumb entries at 240, and you're not buying these, stupid entries where you're buying into resistance. You're literally always going to lose. So that's why, and even if you win once, it's even worse because you're feeding a losing strategy. You will not win long term. Out of 10 trades, 1 will work, 2 will work. But if you want a repeatable strategy for long term growth and long term success, you guys want to be looking at analyzing, hey, what's really going on? There's big volume right here. Okay, boom. Now, next time it comes down to 202, that's me. I'm smart money. Forget all these people. I don't care if it holds at 250. I'm selling to these noobs, right? That's what smart money is doing. And that's literally what market makers are doing. So there's no mercy in the market, right? It's someone's gonna win, someone's gonna lose. So right now, there's a lot of traders that are losing by buying up here. So I'm here to tell you, you switch your perspective on buying with smart money, buying when people are scared, right? And then boom, you get moves like this. Not all the time, but you get the concept of buying with smart money. Same thing with SXTP, right? You guys can see here the most volume, bigger move. Let's go to SXTP. What happened here? What's the 125 line that I use? Biggest move, biggest volume. 125. Next time it comes and retest 125. That's our strategy. Boom, 125 entry. Okay, next 10 minutes, I'm at 150. Boom. No drawdown on this trade. Does that make sense? There's a clean retest. You guys are understanding how to kind of switch your entries and look at the market differently?
So looking back at SXTP, if you see that third candle in the opening at around 9:45,
Yeah.
that's a pretty large volume candle, right? But it's a lot of selling. How do
Yeah.
you, I guess, how do you avoid getting caught in that? Because if you get caught in that, you're kind of stuck in the trade for a little bit until it pops back up to 150.
Yeah. So let's go over that. Good question. Now, one thing I'm going to tell you is that it's very hard to avoid knives unless you're looking at tape in level 2 like a hawk. All right. And at this time, JD mentioned that in chat at this level, JD Trades mentioned that at 0.38, there's a hidden seller, right? And that's what you notice when you're looking at the tape in the level 2. So that's a little bit more advanced, but let's talk about it from just a pure technical perspective. If you're buying at 125, which is support, we already mentioned that, hey, 136 starts right here, right? So when we were analyzing the first few candles, we said, hey, this is the buying zone at 125. And everything above 136 where the candle closes is a selling zone, right? So if this whole thing is a selling zone, you're going to mark out your sells. All right, we got 137 and then 140 and then we got 147. Does that make sense? Do you see what I'm getting these levels from? I got 137, I got 140, and I got 147. So if I'm buying at 125 at my entry, let's just say 126, 127, you still have a 10% move until you're reaching previous levels of resistance. You see a rejection right here, we got 142. So obviously we want the bigger moves, but we're not always going to get instant high of day. So the power of that is scaling out and having your limits set from before. So if you buy at 125 and you already analyze this, you know where resistance is, right? You know that resistance is at 137, so you have one sell there. You know resistance is at 142, so you have one sell there. The next resistance is at 147, so you have next sell sitting there, right? So you have 3 sells, maybe the 4th sell at 155, right? So if you're looking for the bigger move, now what you can do is have those. So theoretically, you would have had already 2 sells hit, right? From 126, you would already had 137 hit, and then you would already had 142 hit, right? So half of your position, or maybe a little bit more, is already out of the trade. Now, next time it comes down, although this knife goes against you, your entry is still 125. Remember that, 126. So this knife, your entry is still above the closing of this knife, right? So you have time to react. But one thing I want to say, that there's people buying this 137 breakout. And if you're buying that 137 breakout, then I don't really know how you can avoid this knife. But that's why I really preach not to buy breakouts and buy into resistance. It's not the market for that, you know? But if you're buying down here with 125, understanding what's going on with big money, with big volume, then it becomes a little bit easier, right?
Gotcha.
Yeah. So just have your limit sells in place, and you can raise you can even have your stop loss at your entry. So let's just say you had half of your position sell, right? Because you had 137 and then 140. Right? That's two sells. So let's just say you had some position sold and it came back down to your entry at 126. It's not that bad. If you think about it, it's not that bad, right? You have some hit at stop loss. You have 50% of your entry hit at stop loss, which is break even. And then 50% of your position sold at 140. So you basically, if you think about it, you traded that position with half size, but got a full win. If you think about it in another way, you traded that position with half. Let's just say, in your case, let's just say you went in with what? Let's just say someone went in with 5K shares. They sold 2.5K on these pop, right? And then it came back 2.5K break even. If you think about it, they still profited on 2.5K shares, right? And broke even on 2.5. So if you took a 2.5K entry, you still technically got your whole win. So it's not exactly works like that, but just some perspective that, hey, although a trade goes against me and comes back to my even if I got half my profits, I still made money, right? So you can kind of understand a little bit better, hopefully, with that.
Thank you.
For sure. Any other questions we have? But I think that's about it. That's about it. What I have right now for today. Kind of going over today's recaps. We have a lot more trades, but any other questions before we do head out? But yeah, are you guys understanding what's going on? Right? Maybe getting a different perspective. Let me know in chat. Understanding what's going on and recapping your trades, very, very important, right? So if I'm recapping my trades every night, you guys should be as well. Understanding, you must understand the market. Understand it. It's an art. There we go, Jacob boy. All right, guys. If there's no questions, then I hope you guys enjoyed this little quick 20-minute lesson. We had a good amount of people join, so I'm glad. I hope you guys can start to understand. Give me one second. You talking about Jacoboy? Look at my chart, please. Are you talking about like 8:45? 11:45. Can you tell me where? I see 10:45. So, am I there? What are you talking about? Market time 11:45? Because market time 11:45. That's actually when it made the move. 11. Okay. So how do you avoid this move? Now, it's not necessarily avoiding it. You have to understand what's going on here, right? So if you're buying into resistance, that's different, right? Obviously, you're gonna get trapped. But if you see a, all right. So this is actually another topic. No, you're good, Jacoboy. That's good. I was waiting for people to have questions, but if all right, now this is a completely different perspective. This is a completely different understanding now. So everything that I've taught you, keep that in one circle, and now let's kind of get into understanding this. Now this is more so understanding liquidity. Now, do you guys understand buyer liquidity is sitting here after making that big move? Buyer liquidity, this lower wick, is sitting here before making that big move. Now, one thing to note is that we've had such a massive rejection that it's obviously it's gonna break down eventually, right? This massive rejection tells us, hey, a lot of sellers here, they're in control. So when it does come down, when it breaks below this level, when it breaks this opening low at 120, once it breaks below that, all right, it's less on watch, right? You're like, okay, it might not be on watch anymore. But once you see a candle like this right here, it's a good volume bar. It's the most it had in the past 20 minutes, right? Good green volume bar and no upper wicks or lower wicks. It's just pure buying volume. 200K. So this could be a short covering. This could be buyers stepping in. This could be something, right? But it's pure candle. There's no upper wicks. There's no lower wicks. It's decent volume. So this is a sign of a reversal. Hey, maybe not instantly, but hey, you know, where there's someone here. There's some buyer here. And when it comes down to this level, you see another move up. Now the concept behind this is not just avoiding this, because if you're in from earlier understanding what's going on here, then the trend is then the thesis is still in play, right? The level is still in play. But if you're buying at 117, 118, selling into 133 would be good. So it's not really needed to avoid. But for example, it's not the best trade, right? It's not, there's VWAP there, right? But it's not the best trade. All right, we obviously want more out of it. Now, if the key levels continue to hold, then obviously it makes that big move, and then 125, which is our that high volume line. Now, what's one reason that I didn't take this level, or a reason that I barely took trades today in general, right? I mentioned that there's not that many trades aligning with my A plus strategy. There's not that many trades, and you guys know that A plus strategy or A plus setup for me is holding this line, is holding the high volume liquidity line, high volume candle that breaks previous highs, stuff like that, right? That's what I'm really interested in. I'm really interested in looking for candles that break previous highs and high volume. So if I don't have a retest against my line, like the only reason I took SXTP is because it broke below and it came down and retested 125. This setup, it went from 120 to 134, but it never retested 125, right? It didn't just sit there. It went below and knifed below. So avoiding this trade, unless you're in from 118, avoiding this trade would simply be following my strategy. That's why I didn't take it here, because it didn't follow my strategy. Now, everyone's strategy is different, right? So if you're looking at my strategy, the only trade setup was this and this, because there was no retest of 125. That makes sense? And the candle over here, right? It's actually holding up after the breakout. It's not just dumping. Right here, we had a pop and then a dump. And then over here, pop. Oh, wow. It's actually holding on the next 5-minute candle. So these are big differences here. Slow pullback to 125 before just a dump here, right? So relative volume, how relative is the strength compared to the previous rejection, right? Hope that makes sense. But I avoided it because of my strategy, which would be that high volume play. But some people, you know, caught it in chat at the bottom, which would simply be a liquidity grab, watching tape. But yeah. Yeah, exactly. So there was no resistance, never turned into support, right? It just fell through. And before this breakout, you can obviously see it held up, tested at 125 as support, got a soak. You add at 127 on that soak candle close or whatever, and you have that move to 152. All right, massive move, 15%, whatever. That makes sense. You guys understand what happened and how to avoid these trades? Good question, Jacoboy. What other questions do we have? All right, Jacoboy, good stuff. So if we don't have any other questions, save them. And if you do and you haven't, asked, you guys can save them for either live tomorrow after the market gets a little bit slower, or for the next lesson, write them down. But I hope you guys are understanding what's going on here in the market. I hope you guys are getting a different visual and stop buying these 140 breakouts and start to buy with bigger money and understand the bigger picture. So enjoy the night. Make sure you guys study some on your own as well. And I will see you all into market open tomorrow. Have a good one. Put some W's in the chat if you guys learned something. Peace.